Okay, guys, good morning. Okay, we don't have a lot of time, but we have a lot to talk about. All right. So I'll make it brief. I just wanted to give you guys a little market summary and how I was looking at the market based on my framework that I've been previously talking about. If we go to the charts here, so you could pretty much look at my videos through the week, and AMD has been playing out perfectly. Okay, except for today, right? Basically, we would have accumulation, manipulation, distribution. Accumulation, manipulation, distribution. It doesn't always happen perfect like this, but every day but today it has been, right? So now today, okay, we have the accumulation, but we did not have a breakout of the high or low until today at 8:30, which was non-farm payroll. Okay, so now we had expansion to the upside and then to the downside. So like still, even though we have expansions to taking out the high and the low, there's no definitive direction yet. Okay, the reports, there are more jobs. Okay, it was more jobs than expected. However, during inflationary times, the reports aren't just cut dry as usual, because the Fed has a dual mandate. Just as they're trying to stay in charge of inflation, and so they manipulate the federal funds rate accordingly, like rate cuts, rate hikes, or whatever, or keeping rates how they are. Being that you have to deal with that, but you have to also make sure everybody's employed as well. So that's the dual mandate: inflation and employment. Okay, so under normal circumstances, you want people to be employed, but unfortunately, more employment means more spending, which means higher inflation. Okay, because people with more money, they're gonna keep spending if they got the money, and that's not gonna drive inflation in the right direction. So, unfortunately, like, a good job report is not good for inflationary periods. And as you know or may not know, we are trying to, the Fed is trying to bring inflation down. Okay, but they apparently, from last year, they thought they did the work. That's why they were cutting rates. Okay, but you don't see the effects of rate cuts, or well, rate hikes, because that the rate hikes is what keeps the inflation in order. You don't see the effects immediately. You see an immediate reaction from the market, because the market is emotional, right? But you see the effects about 12, based on history, 12 to 13 months later. Okay, so people don't tend to think about that. But although that's just the fundamental outlook of it. All right, so although we have basically, I would say, a negative report. I mean, it's good for people who have jobs, right, and good for the economy. But as far as from an inflationary standpoint, it is not good. Okay, and maybe that's why we have this kind of indecisive reaction. All right, it goes up, it goes down, and then now it's back where it started. So yeah, I explained all of that, and like, really, the market is really telling us nothing. So as day traders now, you want to react or take a trade based on the reaction of the market. Okay, you don't want to guess. You don't want to put in your bids before stuff is happening, like before you see volume in the market. Okay, now if you would look back now, I'll just show you a couple of examples. I got to go back to the 1 minute chart, but let me show you let's say yesterday. All right, so I take part in plays. Okay, now the framework is AMD. All right, that is a smart money concept, and but I'm not like just a ball to the wall smart money trader. Okay, because it's not just that works. I want to zoom in so you kind of see the volume here. Excuse me. All right. Here we go. Okay. Now this is Asian session. All right. Now, contrary to popular belief, you can get a trade during Asian session. I just like to up the contracts because it moves considerably slower than New York session. But as you see, this is accumulation, and it's been working out just fine, for the previous days of the week. So this was yesterday. This was Thursday. All right, and I was anticipating manipulation to go to the upside. So I waited for volume, as you see down here. Okay, and like volume is what telling you, okay, there's some players coming in the market right now. So this is when you want to trade. I don't care if it's Asian, London, Sydney, whatever session, New York session, AM, PM, whatever you want to trade when the volume is in the market and there's a definitive direction. I'm anticipating manipulation to go to the upside to the 15-minute gap. All right, as soon as we get volume in, I'm in this trade. Boom, to the upside. And honestly, I really bring my stop to break even pretty quick. I'm not, you can say I'm risky, but I'm really not that risky as far as bringing my stops to break even. I like to have a lotto ticket in pretty soon. Okay, let's go even further. Okay, and before I show you the next trade. As you see, it came to the 15-minute gap. That is these gaps are known as PD arrays. PD for premium and discount. Getting a play in, a valid play in these 15-minute gap or PD arrays. It gives you a good price point, to get in for the other direction. All right, so you see, like they came here, double tested it, and as it came down, you notice this tick of volume again. Okay, now you have the first tick of volume that drove price in here. You do have some volume, some consistent spikes in volume here, and then what this is telling me, people got into contracts a little subtly, maybe more so retail than institution, because institution is stuff like this. Okay, but as it comes down, boom, contracts were out, and it's more so people coming out of their contracts rather than getting into massive contracts, because we didn't have, although it did go back up, we don't have that big time follow through. Okay, so volume really tells you a story. Okay, it tells you that players are coming into the market, especially at key levels, and I would consider VWAP a key level. All right, and just that last example of the other trade. Now, based on the Asian session of Friday, right? I'm sorry, Asian session from Thursday. I was anticipating it to come up, as it came up to the fair value gap above. I was anticipating to go to the Asian session low, right? Which it ended up doing, right? It ended up doing. It did come down to the Asian session low, but it did not hit my complete take profit before doing that. All right, so you can have as many biases as you want. It's not always going to be in your favor. That's why you have intricate risk management. All right, so it came down here. I got in as you see the volume start to tick. All right, the volume started to tick. I got in at an inversion. Okay, and the price rolled down. Look, it rolled down about 45 points. You think I'm gonna let it come all the way back and stop me out without taking profit? So I took some profit off the table, and then the rest stopped me out a little profit, basically break even to cover the fees. All right, and it went up just to come back down to the take profit. But yesterday was a tough day to trade. So you just take what the market gives you, as always. All right, so I'm just showing you the previous framework just to give you an idea of what to look for today. As you see, if we go back to the 15-minute chart, we are in a massive upward channel. All right, I do anticipate this to continue going up overall, but we would have to wait and see. Wait and see how price reacts to this level. It's already bouncing off of the level, so maybe like around. We have no more news. After this the 8:30 non-farm payroll. So we see what we get for market open, and I'll honestly be looking for buys to go to target the 21,960 area, which is last Friday's high. Okay, and it'll be on its way for new all-time highs because look, after Nvidia took a big hit from the deep seek, we have a lot of option strength in the options gamma coming in for 130 for next week. So I think that Nvidia and a lot of the tech sector is gonna lead the charge for NQ, and we expect to be bullish today and for most of next week. Okay, so stay tuned. As always, if you like content like this, give me a like and subscribe. Till next time.